Hello everyone, and welcome to Good Morning Trading. I'm delighted to see you again. Today is Wednesday, June 10th in the year of our Lord 2026. And a trader by the name of How Trader, sorry for the delay with Good Morning Trading. I was with my students doing the Good Morning Trading Premium. So just a reminder, my students always have priority, of course, and the GMTs. Classic, very light, when I have the time actually. And so they're much more general because I don't know exactly who I'm talking to. And I think about half the people who watch the GMT don't actually trade. So you see, I can't really go too deep. The level is there, but there's a big wall. We analyzed my last trades from yesterday, and if you traded, and I trade every day, that's actually pretty rare. By the way, on YouTube, I picture myself trading live with large lots and so on. I was at $60 per point on the Nasdaq, and in 5 seconds there was a 200-point drop on the Nasdaq. I wasn't on the right side of it. There was no way to know that could happen. It was a huge crash. Maybe there was a margin call from an inch fund. We had been dropping for quite a while, so it's possible that an inch fund got a margin call, and in those cases the clearinghouse liquidated them. So in 4 or 5 seconds, for less than 100 contracts, and at $60 per point, I think I was up around $800,000 in gains, then down $12,000. So I analyzed this with my students, and just as a little anecdote, I managed to recover everything afterward. I ended up in the green, commissions paid. But there you go, it happened. It doesn't happen often. I try to estimate that this kind of thing happens about once every 4 years. Not that this kind of event happens, but that I happen to be positioned at that exact moment during this type of event. And I've definitely had it go the other way too, where it moved 200 points in my favor. But human nature is such that our brains mostly remember the bad things, so we can gain experience. There you have it. That's the point. So it was just interesting. All right, sorry about that. Let's get back to Good Morning Trading today. What's going to happen? 2:30 p.m. low. And now the moment of truth. America's finally going to release its inflation numbers for May. We're expecting 4.2%. That's the consensus, especially on the CME. It's still the first time we've gone above 4% about 3.5–4 years. And as if that weren't enough, tonight, and this is super important, I'll come back to it, we'll also have earnings reports being released. So we have 2 triggers in the same session. At 2:30 p.m. French time, the U.S. inflation results, and then Oracle after 10 p.m., usually around 10:10 or 10:15 p.m., releasing its earnings. This is extremely important. Let me remind you that Broadcom released earnings that disappointed the markets and took a huge hit last Friday, which carried over into Monday. Down 10% in Korea, where they halted trading to keep it from dropping further. Now we have an even bigger player reporting results. And at the end of the show, I'll share a little anecdote with you. Now, I do this at the end of every show, about an American president who tried really ambitiously, sometimes politicians have big ideas, who tried to curb inflation, to beat inflation with a badge. It's not very well known. Did it work? We'll find out. Suspense in less than 10 minutes. So we have 3 key issues today that'll set the pace for our session. American inflation, Oracle's earnings, well, that's after the close, and then we have oil prices easing, gradually coming down. WTI has dropped below $90, which hasn't happened in a while. So that's a positive sign. For a drop in inflation, we'll see how that plays out in the market shortly. Yesterday was relatively intense in terms of volatility. We had a kind of short squeeze, with the Nasdaq sliding nearly 1% in 5 or 6 seconds. All right, in the end, the Nasdaq lost only just under, almost less than, 0.97%. Well, less than 1%, that's the case at least, 0.97. And the Dow Jones, on the other hand, gained 0.17%. Dow Jones. It's in a stabilization phase. And then in Asia this morning, the markets were a bit all over the place, somewhat scattered. Let's move right on to technical analysis and get started. I click here and we're on technical analysis. So the Nasdaq, okay, you can see it here. The 2,200 point swing in 5 seconds. You can see it on this candlestick. Then after that, we have the rebound. There you go. That's during the rebound. I was able to, well, I actually managed to recover. The only difference is that afterwards I traded one lot and it took longer. It felt like hours, but actually holding on, it must have lasted about an hour and a half to make up the 12,000. That 12,000, the minus 12,000 that I saw temporarily. Counter. What's interesting is that we're positioning ourselves on the middle swan 1 month after the bounce on the weekly support 1. Keep that in mind. If there's a lot of movement here, we've seen a huge reaction on the weekly support 1. If you get that bounce again, if we come back to it, we'll probably see at least another rebound, though maybe not as significant. At the very least, we could come back to it. Look for the monthly support 1. So there would still be a chance for a nice rebound of at least 50, 100, or even 150 points. We'll have to see. But actually, it's good news that it's trying to stabilize on its middle and its monthly level. They're going to wait until 2:30 p.m., so don't get clever before then. It's really taken totally unnecessary risks, completely unnecessary. On the S&P 500 up, it broke through 74. It got us all bounced. Check it out. It's at 7,250 points too. And we're bouncing back as I'm speaking to you. The 250, 500, 750, and 250, 750 levels are some of my favorites, and yet there's a rebound. Well, there you go. Now this makes me want to trade even more, but it's a solid 500 for the Dow Jones. Like I told you, we're in a ranging phase. It's stabilizing on its middle S1W, so you can see we're really in a stabilization phase. They're waiting for the U.S. inflation numbers today. Like I told you on Monday, it's the big event of the week. And then for everything else, especially the Nasdaq, it's mainly Oracle's earnings after the close of the U.S. markets. As for the CAC 40, just quickly, well, it's in its range, but here you can see a small difference. It's more in its range, right at the contact point, at the support zone, and everyone is trying to catch important support levels. They're stabilizing there. There's not much volatility left. They're just waiting now. We're really in a waiting phase. But it's on its upper range, rather than on its monthly pivot or lower range. So that's actually a pretty decent sign. If you look over 2 months, we're at the top, at the very top of the 2-month range. Am I right? Congrats to the DAX for that, but not so much for this one. On the contrary, it's on the weekly, or rather on the 15-day chart. It's at the bottom of its range, right at the lowest point from last week. So yes, since we're at last week's lowest point, that means it's at the bottom of its range. Generally at this point, it's in a waiting phase. There's the 24,1500 level, which is the 500 mark. That's a really, really important psychological level to hold. But still, the momentum is actually different over the 2-month period. You can really see it here. The DAX has taken off, and now it's in phase 2 of stabilization, while the CAC 40 over the past 2 months, it's not taken off at all. It's just been flat for 2 months. So it's ranging, which means there's actually a slightly more positive point for the DAX. As for the lows, as usual, it's going down. Nothing new there. It's been dropping for 2 months, so we just keep going. Bitcoin, well listen, what's it doing? Well, it's going down. It's been dropping for 6-7 weeks now. 6 weeks of non-stop decline. We keep going, very consistent, nothing but red daily candles. You really can't do better than that for now. And then the good news, of course, is what I was telling you, the very clear drop in the price of a barrel of oil. Why? Because there are a lot of rumors that they're about to get close to it and so on. You might say they're firing missiles at each other. They're about to reach an agreement. Yeah, that's it. Negotiations usually mean you're very close to a deal. That's when they launch even more missiles, just before sign-in at the last minute, to show that they're still tough, after all. There you go. You can't... Oh, here I am again. You can't joke around. You have to show that you've got strength. So right now there are some really persistent rumors because after all, we've still lost 10% in less than a week on a barrel of oil. A drop that you'll see reflected at the gas pump for your cars in about 2 months, right? Price drops take a long time to show up, but price hikes are almost immediate. They explain it very well. They usually do a great job justifying it. Well, yes, the explanation is that they want to make money, and so they're allowed to make money, and prices are free, unless you're in the Soviet Socialist Republic back in Stalin's time. Price controls have never worked. They've always ended up in famine, usually because it's food prices that get frozen. It's always ended in famine. All right, the barometer of the day. So, the barometer of the day. For me, as a reminder, it's the thermometer of artificial intelligence. I'm telling you, the big public will see these results tonight, so be careful. These aren't small ones, not small at all. A small company has already gone up 40% since March, so they're really at their peak. Their order book has reached $553 billion, up 325% in 1 year. As for my own order book, I must be at about 90,000 euros. Order book! You see, it's not quite the same for my SIO company. So what's really important is that they have incredible results. They've gone up 40% since March. They have had a staggering order book. But be careful, and if the results disappoint, we could take a huge hit on it. So really, the market won't forgive any mistakes or missteps. It could trigger a correction in tech stocks. On the other hand, if it's a success, it would really confirm the rebound we're currently seeing, a very slight attempt at a rebound at least, on the Nasdaq. Let me remind you that our big event is at 2:30 p.m. with the inflation numbers, and next week, and I haven't mentioned this yet, next week we have the FOMC meeting. If we add 7 days, between the 16th, they meet on Tuesday, they eat, they talk, and on the 17th, they tell us what they discussed and the decisions they've made. The 16th, so it always lasts. 48 hours, and I wanted to mention it because it's coming up. First meeting with the new Fed chair. Goodbye, Jerome Powell. We'll never talk about you again. It's over for you. What's the name of the new Fed chair? Does anyone know? Kevin, yes, in the back of the class. Yes, Kevin. Kevin Warsh. Well, yes, congratulations. It's Kevin who's coming in as the new Fed chair. I don't know if that's a good sign. I don't know. Actually, I used to be wary of Kevins until the day I met a Kevin at my seminar, shout out to you, who was absolutely awesome. And at that point, I thought, Kevins are people like that. So we'll see. We'll see how it goes, Uncle. Agenda, 2:30 p.m. Today and tomorrow, we have U.S. producer prices, and that's the other piece of the inflation puzzle. That way, we'll have all the data. Did producer prices go up? If producer prices increased, that means retail prices are likely to go up too. There you go. So I'm just letting you know, and for this one, I'm going to send an email to the people from my school. If you want to come to the July seminar, between the 5th and the 12th, there are 3 spots left. And between the 12th and the 19th, there's 1 spot left. So take advantage of it. I'll put the details in the video description. You can click and you'll get a PDF. You'll need to make a decision quickly because, in my opinion, it's going to fill up this week. That's it. Now, the little story of the day. I told you that a U.S. president once tried to fight inflation with a badge. Why not? So this was in 1974. I don't know the details very well. I had just been born. It was Gerald Ford, who isn't exactly known as the most brilliant U.S. president. That's why, when you know history, it helps put Donald Trump into perspective. The United States has had other Donald Trumps before, who didn't have social media and all that, but who certainly had original ideas. He launched a campaign called Wipe Inflation Now. Basically, if I translate it, it means something like, let's whip inflation now, or let's kick inflation in the butt now, and it made white inflation. Now win, so it made win, winner, top. It's the word Americans love. And he had millions of win badges distributed, which Americans were encouraged to wear proudly. And you had Americans wearing the badge to show they were fighting inflation. So, what was this idea? What was going through his head? Unless he had a box of badges and made a deal to make money off it, I don't really get it. The idea was to defeat price inflation through civic-mindedness. We consume less by consuming less. So here, there was an idea that is very modern, which is to consume. I'm still here. In the United States, the very basis of American identity is consumption. So by wearing this badge, he was showing that he wanted to consume less and that they were going to garden more. That is, they were going to cultivate their own little garden. So inflation, yet. Did it work? She didn't notice that the guys were wearing badges and it kept going up. The year's 1974, the first oil shock, etc. And Alan Greenspan, who was my favorite Fed chairman, would later call this campaign one of the most absurd ideas ever to come out of Washington. But he didn't know Donald Trump yet. So there you have it, in my ranking. When it comes to sometimes a bit wacky ideas, we've got Donald Trump. But never forget Gerald Ford, who was still really, really good. All right, thanks for sharing this little moment with me. And now, here's my closing line that I memorized. And if you're curious, I'll open the doors to my 5 worlds, my 5 passions, my channels: YouTube, trading, economics, history, psychology, and news. Well, there you go. That would be great. 5 channels. Just one habit to pick up. Well, subscribe. It's now, and normally I press the button, subscribe. There you go. Subscribe. I disappear too, which isn't very smart. There you go. You're subscribed. And above all, always stay curious. Why? Because if you're curious, you think, you search, and that's good for fighting off your Alzheimer's, and to be a little less dumb. Don't worry, I'm very dumb, but every day I fight it. I try to be curious, so let's all be curious. Big hugs. Take care of yourself. It's 9 a.m. The European markets are opening. I'm leaving you right now.